Welcome, everybody, to a new episode. Are you ready to dive into the exciting world of land and development? This is the bread and butter of real estate deals. Join us as we explore the lucrative opportunities with industry expert Dan, who's been in the game for 6.5 years. From financial considerations to emerging trends, this episode really deconstruct what it is to develop land, to buy and sell land, to flip land, everything kind of land related. So, Dan, welcome.
Nathan, thanks for having me.
Absolutely. Can you give us a background as to, a little about your background, your expertise, how you kind of got into the land space?
So started pretty early, worked full time through college. I was running someone else's business, working and going to school. When I was about 20, I was coming up where the end was in sight, right? I was about a year and a half from graduating, and I started thinking, all right, if I can work 40 to 45 hours a week and do a full-time class schedule, I can certainly start some sort of a business because I started working very early and ran other people's businesses in high school and did side landscaping businesses, stuff like that. So I was always working. So I started reading different books on investing, entrepreneurship, and it was like everybody else when I stumbled on Rich Dad Poor Dad, it was like light bulb moment, real estate it is. So when I was 21, I bought my first house hack. It was just a duplex. I still own it today, Parma, Ohio. Shortly after, moved to Colorado, bought another house hack. So I had the duplex, I had the house I was living in, I was renting out all the rooms in the house I was living in, still working a normal job, and I hated it. I hated working for someone else. I couldn't do it. And so I went to a local real estate group in Colorado Springs where I met a guy who'd been doing land and development for the past 40 some years, longer than I'd been alive. And every weekend I would drive an hour south to Pueblo, West Colorado, for anyone who knows where that is. And I'd work with him, help him in his business. And what he was doing simple infill new construction, right? Pueblo West is a giant subdivision from the 70s. Same guy that did Lake Havasu did Pueblo West, for anyone who knows where that is in California or Arizona. I learned the basics of how to build a house, really. And then at the same time, kind of as a secondary effect, I learned how to go direct to seller for land because he would need more lots for these projects, right? We would do specs, right, where you're building without having it sold and then working to sell it once it's built or as it's being built. And then we'd also get pre-sales from that where someone might come along and say, well, I don't want that one, but do you have any other lots? And so I was going out and getting those lots so the inventory was available. And when someone wanted a new house, we'd have a lot for them, right? And so I learned how to go direct to seller. And the first couple land deals I did were, $1,000 assignments to him, or very, very small deals. But I was learning, and then I was also participating with him on the new construction. So I did that for a number of years and eventually just took it and ran with it. And so that's really all my business is today, is a giant direct to seller marketing funnel, buying land at 30 to 60 cents on the dollar. And then a lot of it is just simple buy and resale. I say it's just land flipping, just like there's home flippers, it's land flipping. And then a few at a time, I'll put new construction on. And that has been the engine, kind of the cash printing machine to continually buying more and more rental properties over these last, coming up on 7 years.
Awesome. Awesome. They say that kind of, land is like the foundation of most real estate. They're not making any more of it. So that's the great thing to buy and sell, right? How do you really, drive value when it's just kind of vacant land? Are you just timing the market? Are you really kind of selling it to the right developer? What's kind of the business strategy there?
Well, there's a mix. I'm a new car here soon, and I don't want to deal with selling my old car. So I'm gonna probably just trade it in because it just doesn't matter. And they're gonna turn around and flip it and make money. So there's a wholesale to resale or to retail pretty much in every industry, right? So there's that. There's people who just want to get rid of it. And then there's simple improvements you can do from clearing and getting a perk test and septic approval, very small improvements. There's one we have under contract where we're splitting 5 acres off. It's 10 total, having the new survey done, the new legal descriptions, and then selling that to a developer. Little things like that, small value adds can lead to substantial value add as far as the sales price. I wouldn't say timing the market. I don't ever want to time the market, but we have gotten pretty good, especially in Florida and certain areas that we know very, very well, of knowing when we can push the comps. We sold one yesterday at 69.9 where the comps were in the low 50s, but we kind of saw the trends. We knew that area. And so we do that quite a bit where there's certain areas that are in huge demand and we're getting a nice return just because we know we can sell this higher than the comps. So
Yep.
it's a combination. And of course, the new construction is the obvious value add.
That's the power of knowing a market really well, right? You kind of know when to push things, when to kind of pull back. What, from like an investor's perspective, what would be the benefit of investing in land over, say, another asset class?
Well, I want to make a distinction because I think these things often get conflated. There is the long-term passive buy and hold, whether that's nice real estate that's managed by a property manager or equities or investing in somebody else's company in a startup, that's in one bucket. And then there's the active business of whether it's flipping houses or buying and rehabbing distressed apartments or flipping land. That's in a different category because the returns I'm expecting from the active category are astronomical, right? Because it's active, it's a business. So people often conflate those two. They'll say, oh, you got a 50% return or a 100% return, you doubled it. Yeah, but it's an active business with overhead. That's totally different. And so in my mind, land is my vehicle for scaling the capital to then put into the nice buy and hold. So I see these as totally different buckets. And land to me, it's not a long-term buy and hold that I just sit on. It's a way to just endlessly multiply the capital to buy those nice buy and holds. And so that's what I'm doing for years and years. I mean, if you're at a point of wealth where you have a massive cash printing machine, whether you're an NBA player or something like that, I'd probably think about it a little differently if I was already in that category, but I'm not yet. And so for me, the land is just a means to rapidly multiply and recycle, compound.
Got it. I love it. So it's a way, it's essentially your vehicle to snowball the capital to then
Yeah.
buy longer term buy and holds. For those who, familiar with the traditional real estate, right? They might own single family duplexes, triplexes. What was kind of the biggest hurdle, pivoting and moving into land? Was it kind of an easy transition, or were there some stuff, some steep learning curves that you had to kind of adapt to?
It's totally different. It's a different set due diligence. It's a very different seller avatar, right? For any business, if you own any business at all, you need to know who you're marketing to. My dad has the same name, so I got an AARP card in the mail the other day. Like that was a failure of them to market to the right avatar. That's an obvious, funny example, but people do this all the time, and it relates to your question. So I see this with people who were single family home flippers or maybe wholesalers that want to get into land. And they send mailers or have a cold calling script that's aligned with the avatar that sells houses at a discount. And they're very rarely the same. It's a totally different avatar, very rarely distressed. And so that is a big hurdle for most people is learning who you're marketing to and aligning accordingly, and then just learning all the ins and outs that go into new construction so you can properly evaluate the land, because you need to know what that end user is going to ask. And so for me, that came more naturally because I learned about land from the context of actually building homes. Whereas if you've never done that, you got to learn the basics of new construction so you can speak to these sellers like you have a clue what you're talking about.
Yeah. Yeah. Let's talk about, a little bit about how you actually do value land. Because in the multifamily space, it's obviously based off of the income that the property produces. But in a land deal, right, if you haven't built anything, there's no income for that produce. So curious, how does one tell a good, parcel or lot of land from another one?
So it is just comping, just like with any residential house, but the struggle is knowing what is and is not a comp. And this is where we have an extensive due diligence sheet, and then we have a second layer, market specific due diligence sheet. You've got to have a local expert as you go into new markets because the norms around really everything from health codes allowing for septic to norms around size, topography, flood zones, this varies so much from one place to the next, where if you take the rules and heuristics you have in one area and try and apply it to somewhere totally different, you can get in trouble. If you're coming from back east and you come out to Colorado or California, a lot of these markets are struggling with remaining water rights and corresponding taps. And you might not know that. And you could go buy a piece of land that has no water available to it. You don't even know what that means because you're from back east where that's not much of a consideration. Or another example, I do a lot of business in the Carolinas where perk tests are absolutely essential to make sure that the soil will allow water to percolate for a septic tank. And I was comping a piece of land in some market in Arkansas. I forget. Someone submitted this to me, and it said failed a perk test. I go, why are you submitting this? It's worthless. He goes, no. The health codes are totally different. I'm like, no way. I call the realtor that sells all the land in town. He goes, oh yeah, you just do a such and such type of system. It's a little bit more expensive, but nobody really cares. Like just totally different. Whereas where I'm doing business in North and South Carolina, for all intents and purposes, the land is worthless if it doesn't perk. Right. And so those are just a couple examples.
Yeah, I love it. Can you talk about a little bit about the trends that you're seeing? Because I'm assuming that the land game hasn't always been the same. So curious, at least in the multifamily space, we saw this huge influx of pricing and rent growth that happened a couple years ago. Curious as to kind of how COVID affected your business as well.
So everything went crazy and to the moon during COVID because so much the money supply was increased to such a degree that was just obscene. Why is there inflation? Oh, anyways, don't get me down that rabbit hole. So now the biggest thing I've seen is a lot of the more expensive markets have calmed down quite a bit. Colorado, that market, Pueblo West, I'm not buying and selling land there. I'm still doing new construction. We can talk about that down the road if you want, but that land market has become hugely oversupplied. It's just sitting there. Not a lot's going on. So I watched that market go through a full cycle where when I moved there in 2018, it was pretty dormant, went crazy for about 3 years, and then it's dormant again. Down in Florida and the Carolinas, though, if you're looking for opportunity, look to the markets that are still really affordable. And then look at the second or tertiary markets to those major metros, and they're still just on fire. I mean, we're selling land within 24 to 48 hours all the time of listing it on market at or above ask, pushing comps. That's still happening. And even right now, that one I said closed yesterday at 69.9. This is the worst time of year to sell anything in Florida because half the population leaves. It's disgustingly hot. This is analogous to winter in Colorado, right? It really slows down the market. Summer in Florida really slows down, but there's still some places where land moves very quickly if you have the right type and are priced accordingly. So that's the biggest trend is the Southeast affordable markets are still on fire, and it feels very similar to 2021, 2022 in a lot of those areas.
Yeah, similar to multifamily, and that makes sense, right? Like if the real estate's going to be attractive and high demand, I'm assuming that the land is going to be even more high demand, especially if curious, are you always selling to residential owners? Is there times that you'll sell to kind of commercial folks, new development? Kind of curious what your typical exit strategy, or does it really depend on that specific lot and that specific market?
It does depend, but the vast majority of it is ultimately going to be used for single family homes or, we sold one, it's a commercial lot in Florida on a corner main street, so they'll put a strip center there, that sort of thing. So it's usually either the end user, the mom and pop who just wants to go put their home there, or the developer that's going to build that home for the mom and pop, with occasionally it being a commercial piece or a multifamily piece, but generally it's that end user or the small builder. But we've sold lots to DR Horton, so
Hmm.
it's not always the small ones.
Got it. Makes sense. And are you working with the counties in terms of like zoning or anything legal related? Because I'm curious, it's not the funnest of topics to talk about, kind of the legal side of things, but it is a very important one that I want to touch on briefly.
So I'm glad you said that because that is an avenue for making a lot of money. Simple entitlements, right? Simple improvements or allowances for an extra story or an extra few units can add a lot of value because, to your point earlier, let's say it's a piece of multifamily dirt, or I watched a buddy do this with a piece of dirt that was meant for a hotel, where if you can get the county to allow for more units or extra stories to that hotel, it can be a huge increase of value because that end user is valuing it based off of the income, right? Oh, the income they're able to produce when they put the hotel or the multifamily building there. So that is a means for making a lot of money. It's just a pain in the ass. So to answer your question directly, sometimes. So like that piece, that 10-acre piece splitting 5 off, yes, we have to deal with the county. We're actually getting the septic permit. Yes, we have to deal with the county, but many times we don't.
Yep, got it. What are kind of the some of the struggles or challenges that you typically run across? Because I know when it comes to actually new construction, there's delays with financing and cost of the materials itself. But I'm curious as to kind of at the very start of the pipeline, if you will, what kind of challenges you experience.
Attic sellers can be part of it, or them just bringing their personal life into it and disrupting closings where you think you're already set, and it just erratic sellers can be a big part of it. I mean, it's just human nature, really, as I say this out loud, especially when someone is in a domain that they're not used to, right? So we had someone pull out of signing a contract recently because he goes, well, I can't afford my attorney to double check everything. And I go, hey, I'm talking through my acquisition manager because I don't talk to the sellers anymore. It's so ridiculous. It's a not that expensive piece of land. Like, just call the title company. We cannot take advantage of you through a title company. You don't need your attorney. But how do you communicate that when you're on the other end of the table and get them to believe you when, of course, your interests are not aligned because we're trying to buy it at a discount, or at least he thinks, who
Yep.
are these people? I don't know. So that's sort of the big challenge, just navigating human emotion and ego and everything that goes into that. And then random title problems. We have one in Florida. The county just failed and they lost the deed.
Mhm.
So can't get title insurance. So we're working on going through quiet title. So that's just frustrating. Just little irritating title issues like that pop up all the time. So those are the main things that come to mind as far as just acquiring the land. We can talk about new construction as well if you'd like.
Yeah, let's jump into it. I mean, because I know that one of your strategies was to sell new construction. Curious to know what that process looks like, how it differs from just selling to a mom and pop owner.
Yes. So really important to understand the land that I'm targeting to actually put new construction on. It's finished lots. These are not pieces of raw land where I have to go through all the work of creating the plat and subdividing it and bringing utilities and roads. That's all done. These are failed subdivisions where, or maybe not even failed, mostly built out, and there's a few lots left. But like Pueblo West is a great example of this. Built there for years. I'm building there right now. And you have lots with water, sewer, power. They're already entitled, right? I can go put a duplex, because that's what I'm doing right now on these lots that are zoned for duplex. So that takes out a huge amount of complexity. If you watch someone do a project where they have to, let's say they have a piece of dirt that only lets you build 10 units and they want to put 40 there, there's a huge process to go through with the city or county or whatever the various layers of government oversight are to get to that point. That can take years and hundreds of thousands of dollars. So I'm not dealing with that with my builds. Simple infill. Okay, from there, once that's been established, I buy the land, and it's all about the right contractor, because if you do this right, they do the whole build and it's mostly passive and you just double checking and dispersing and checking numbers and that sort of thing. If you do it wrong, you can go broke. And so more than anything, you need to screen your contractor. You want somebody who wants to build for you. There's some contractors that all they want to do is retail clients. That's their thing. That's fine. They're not your builder. Whereas like the person that's building for me right now, they don't want to deal with it. They don't want end users. They don't want retail or people who are nitpicking finishes or anything like that. She loves to build. It's two people. It's a daughter. They're both contractors, but I deal mostly with her. And she and he love to build for investors where there's just a set fee and they don't have to deal with it because this isn't my home. I just want a finished product. And so it's much easier, right? So you need that sort of person who wants to work with you. And then I really do not like the model where it's cost plus, because then that doesn't align your incentives, right? Cost plus, for anyone who doesn't know what I'm saying, is like, okay, Nathan, you're my contractor. I'm going to pay you whatever it costs plus 15%. Well, the more it costs, then the more I pay you. And then, so our incentives are totally disaligned. So try and align your incentives. Try and find a contractor who wants to build for investors, who has built that sort of product in that market before and who's not broke. If they have to call you every time they're at Home Depot to use your card, if they can't float something for a week, that's a problem, right? I don't want to work with those people. And I really want to stress, watch out if they're new to the market and they're telling you they have all this experience, but they're new there and you've never seen them perform there. Ideally, they have tons of experience in that market, building that product. If you can get referrals from people you know and trust, that really helps, right? These are the boxes I'm looking to check. And then you ask them for a bid, right? And so with my contractor, I just pay a set fee that is broken up into 3 payments throughout the build process, along with, of course, just the cost. And what I really liked about her and her dad is they had been building this exact duplex in the market. They had just finished several of them right around the corner. And so I knew their numbers were accurate because those are real. Those are numbers that they just had actually come to fruition. So I'm ranting a little bit here, but these are kind of all the things I think about. And then don't pay them everything up front. I mean, I would hope your listeners would never do that, but be very careful about paying anything until some sort of work has been performed. Make sure you have a good contract. You know, if it's somebody new that you don't know very well, perhaps putting in some sort of incentive where the quicker they get it done, their pay might go up a little bit, and then vice versa. With the people I'm using, a friend of mine had been using them. There were so many positives that I wasn't super worried about it.
Yep.
And so if you set it up right and expectations are clear of who is doing what, that's another really important point. You know, don't get into it and then find out that they were expecting you to call and set up the water tap and orchestrate things, right? Are they doing everything? Are they just delivering you a finished product, or are they expecting you to participate, right? Make sure that's clear too and in the contract. Now, once you've done that, if you do it right, this can be mostly passive. I mean, a number of the homes I've built, I just dispersed the funds and my realtor sold them, and that was that. And I spent a few hours on it. And then there's been ones where the contractor went south, things went wrong, and they were a massive headache. And so setting things up properly with the contractor, screening and expectations are, and then just always have an extra allocation for things going wrong. You never know what could go wrong, so you need that liquidity, right? You want to make sure you have cash aside. Yeah, so now I've got a duplex going on right now. We started April 28th, I think it was, and we are insulation should be going in, insulation and drywall this week. So they're moving, which is exciting. And so it's my first time using these contractors. So I have several more lots lined up, but one of my rules is with new people, one deal. You should only do one deal. Once it goes well, then you can do the others. So assuming that they continue to perform, get this done as they have been, I have them bidding out, doing some single family homes again, and then I have another few duplex lots I just want to build and keep because I'm just keeping this duplex.
Yeah. It sounds like speed is the name of the game. Are you ever sitting on a lot and not flipping it and kind of playing kind of the long-term strategy? Or is the idea always to, hey, get the land, do it, be done with it, and then sell it as soon as possible?
Generally, yes, it's about velocity of capital, but I do have a couple other lots in that market just sitting there for the next builds.
Got it. Got it. Awesome. I want to, pivot quickly to, again, going back to the active versus like passive investor strategy. So it sounds like, once you've done the active part of it, it can become passive. But is there a strategy where people, if they don't want to go the active part, can partner with people who are doing kind of the active management and solely invest passively? Or is it really just, it's only an active game and then, eventually it turns passive later down the line, but you have to first get in the active game first?
No, it just depends if you have money, right? I have a buddy who's a doctor. He's a specialist. He makes like $500 an hour. So for him, he just, being a doctor is his cash printing machine. And then he just puts it into funds, syndications, very nice real estate that's managed, right? How passive it is depends a lot on, assuming you have proper management, the niceness, the quality of a number of the houses and duplex. I mean, they're passive. I don't ever hear anything. They just pay. They treat it like it's their house, right? And so, yes, the short answer, yes. But this whole, I feel like there needs to be a bit of a paradigm shift in a lot of what is taught, especially, I grew up on Bigger Pockets, started listening to that, years ago, and you don't invest until you have money. Maybe a house hack or two, but you're not an investor. You need money, then you invest. You can start an active business, finding real estate at a discount and flipping it or whatever, and find other people's money to do that. But you need money to invest, and so you can, but you got to have money. And then there's all kinds of options, whether it's triple net or nice buildings that are managed, multifamily, syndications, funds. There's plenty of options.
Got it. Where do you see kind of the future of land development, potentially your business in the next 5-10 years? Any kind of major changes, or is it just pretty much, hey, we're in growth mode and we're just trying to pick up more real estate?
Yes. So the major change is the gap in the market. So like you said, land is the foundation, right? It's the basis of all real estate, all buildings. Yet, if you want to go get financing on a piece of land, good luck. You could be buying it at 30 cents on the dollar. No one's going to finance that for you unless they're a private investor. And so my newest venture, and really it's just a way of solving my own problem, is Ground Up Partners. We're providing capital for land deals. And so that is really the future where, if you think about it, for me, I'm talking personally, all day in my business, my acquisition managers get deals and I double check them. And then I make sure the capital is available. Well, with Ground Up Partners, people are now bringing deals and I double check them and then provide the capital, right? And so I have a hard money lender I've used for new construction. This was kind of like where the idea came from. And I forget how, or maybe he was just talking to him, but I realized one day all he does, and he's been in business like since the late 90s, early 2000s. So he knows what he's doing. He raises money at 5 to 8, 9% from doctors, accountants, people who don't know the active business. They just want to work their job and then put their money somewhere. And then he sells it much higher as a hard money lender. And so in effect, that's all we're doing for land. And that to me is the much bigger picture where there's such a need for capital in the land space. That's just endless. And that's really where I'm pushing to go, where of course my guys in my personal business continue to produce, continue to get deals, but need for this, we're getting huge deals submitted to us with massive margins. And so more than anything, just continually leveling up the skill set around analyzing and really knowing whether it's a good deal. So you can do these huge deals without risk, And then at the same time, raising more and more money to then be that go-between, that person that can do both, because nobody that I've seen anywhere has figured out how to apply, institutional level capital to this land flipping space.
Yeah. Yeah, it's about that arbitrage, right? It's about, hey, here we have an active business, we're snowballing capital, but now that we're good at this kind of foundational business, we can also leverage the skills that we have and then deploy capital for other businesses as well. It's similar with multifamily too, especially in like the syndication space when people go the private equity realm and then start lending their private equity out to other projects. It seems like a natural progression. So that makes a lot of sense.
Yep.
Dan, you went over a lot of good content about, land, its value, the purpose of it, active versus passive. Any kind of last golden nuggets if someone's looking to get into the game, either on the active or passive side, that you want them to be, just cognizant of before they dive in?
Yeah, pick a niche within land and stick to it. I have buddies who focus exclusively on huge ranches in Texas. They subdivide those and they sell those off. I have another friend I'm thinking of that he focuses just in his metro and does simple, speaking of working with the county or city, simple entitlements where the builder wants a piece of land ready for a 100-unit apartment. He makes that happen and sells it to him for a huge margin, but it's slower, it's more tedious. That's his whole niche. There's people like me that focus mostly on buildable land and quick flips, right? So don't try and do everything. The umbrella of land is massive. You could focus entirely on rural recreational. That's not used for homes or new construction where you're dealing with builders. You could just sell on terms. Some people do that. They have a giant note portfolio that they then exit. So don't try and do everything. Pick a niche, get really good at it where you know that better than everyone else. And that is the best way, from my experience, to be successful. If you try and do everything, you'll get yourself in trouble.
I love it. Yeah, they say go deep before you go wide. So
yeah,
definitely take Dan's advice. He has a lot of experience in the game. He knows what he's talking about. So Dan, if our listeners want to get a hold of you, how do they reach out?
Dan Haberkost on any of the social medias, or danhaberkost.com. And then if you have a land deal you need the capital for, GUP, standing for Ground Up Partners, land.com.
Perfect. All right. Thanks, Dan.
Thanks, Nathan.
If you like this podcast, please hit subscribe or a thumbs up, and we'll see you next time.